Hello and welcome to this week's Trading the Trend on Wednesday, the 8th of February. Last week, we went long the Australian dollar versus the US dollar. And when you look at the daily financial bet, we did so after having formed this bullish hammer formation. And the idea was that we were going to make new multi-month highs. And indeed, we did rise to levels last seen in June of 2022 to 71.57. But then the Australian dollar versus US dollar came off on a stronger US dollar, especially on the back of much stronger than expected US payroll data and job creation in the US. And basically what we saw then is a reversal in this currency pair, taking us to below our stop loss level, which was at 69.83, costing us 92 pips. So that's last week's trade, which unfortunately went wrong. But again, it is not such a big problem because basically here, for example, we've had a less than 100 pip loss. But on this trade, which we also recommended at the beginning of the year, we had far greater profits take us all the way up to the high we saw last week. Now, this week's Trading the Trend is to go short the US dollar versus the Japanese yen. And we want to do so because, as you can see here, we've been trading in a clearly defined downtrend with lower highs and lower lows since October of last year. And we have failed over the last few days and weeks every time we hit this 133 yen and 63 sen to 134.77 sen resistance area. And we fell short of this resistance area on the back of that stronger US dollar on Monday morning at 132 yen and 90 sen. So what we would like to do now is to go short dollar yen at 130.85 with a stop loss at 132.95 and a downside target at 126.50. And this downside target would take us back down again towards the low seen in May of 2022. So that is our Trading the Trend today, is to go short dollar yen at 130.85 with a stop loss at 132.95 and a downside target at 126.50.